Hi, Ron. It's Stu here again. We're Wednesday. It's the middle of the week. Much more importantly, though, it's Fed night. FOMC, the Federal Open Market Committee, the major decision maker in financial markets, the main arbiter of U.S. interest rates, the independent, for now, central bank of America, the United States of America, will keep interest rates unchanged at a relatively high 4.25%. But really, what markets are looking for tonight is will we see a hawkish? I mean, all that. It might sound like a strange thing to say, but the cards are sort of in the Fed's hands because the market is doing, and the tariff situation is doing a lot of the heavy lifting for them. So we're still expecting possibly 3 interest rate cuts this year. Some are expecting no rate cuts. Big surge in inflation potentially still to feed through, but yeah, all will come out in the wash as the year progresses and this tariff situation moves sort of. Actually, this policy sort of gets formulated, and the impact starts to feed through either into higher inflation or the repatriation of high quality manufacturing jobs, which is what the president and his team are looking for, or indeed the US tipping into recession, and how deep and significant that recession becomes, whether it's just a simple technical recession or whether it starts biting, the heart of Trump mainstream voters and ordinary workers. And that's really what the administration should be really worrying about. And I think that's what they're concerned about, that turnaround we saw when they met the major retailers a few weeks ago. But anyway, it's all to play for tonight. So as far as I need said Carney, then we'll talk about Mr. Carney in a minute, Prime Minister of Canada and former central banker here in the United Kingdom. Before Powell and his team come out to face the press after their 2-day meeting, will we see some sort of loosening of this quantitative tightening we've seen? So it's not really, obviously the interest rates are not going to change tonight. But we could see some attachment to try and get this massive debt mountain down. So we'll see what comes of it and what's in the statement and how he performs again in front of the press and at the press conference. So if I just get rid of my big old head and we look at the markets. So I'm going to start with this, the 4-hour chart on the gold market. I know a lot of you trade gold and Bitcoin in particular. Hello, what happened there? I lost all my. Because it's the wrong chart. That's why it's. I clicked on gold euro there. Sorry about that. So we've had a really good run up until last night. We had a big 4-hour down candle here into close last night. We look at the 1-hour time frame. And that was, big positive day yesterday. Heavy candle here at the start of the day, 2 o'clock in the morning. This is the 2 to 3 candle in the Asian session. Worries about the step up with the situation between India and Pakistan in particular. Deaths being registered in Pakistan as India responds to the attack in Kashmir. The Pakistanis have told they will respond. Obviously, both of them are nuclear powers with nuclear capability, so it's always a bit of a worry globally. So gold got a lift on the back of that, but the uncertainty continued to lift it up. So we came down quite significantly as start of the day, and we just waiting on the Fed here. 3,388, 3,388 gold trades at the moment, but we've had a good 2-day run. If we look at our 3-day run, and then we turned around today, so big old rally, as we said on Monday at the beginning of the week. This 20-day moving average yet again coming to our rescue, or coming to key support area. Excuse me. Key support area, the key 50 fib level, coinciding with that 20-day moving average, providing support for 3 days. there. Monday's rally, Tuesday followed through, and we've cooled a bit today, Wednesday. Where did we rally to? Well, it was the previous end of day highs we saw at the end of April. So no surprise there as we went to 340.20 plus. And I say we're down today and currently trading at 3388, but still remains nicely bid. 20-day moving average now at 3270, just shy, still $30 shy of the key 3,300 level. Remember, in April, we did come down to test the 3,200 level as we retraced this big old rally we'd had during the first half of April as well. So gold remains bid. We've got a down day today, but don't let that shake you out if you're still long on the gold on the higher time frames. So we'll leave you with the hourly chart there. So flattening out and just waiting for some direction, possibly from the Fed. Crypto's having another great day. That key 96,000 has been breached again. We're trading at 96,250. So strong day. Excuse me. Like the rally we saw in gold earlier in the week. Excuse me about that. Sorry, let's go back to my daily chart. A strong rally today from cooling on Monday. We bounced a tad yesterday, but we're back over and out of the channel, the 92 to 96,000 channel. This is what the bulls want. Do you see a nice significant break on that? So if we can move higher today and tomorrow, and close above these highs from last week when we went to close that day there at just shy of 97,000. So this hold and break of 96,000, a close above 97,000. Well, that will be a new recent high for Bitcoin, and we continue to move up here. So we've had this nice breakout as we talked about at the beginning of middle of April, and big old rally. We've followed through and we're now holding above the 96,000. So don't be surprised if we come back into this key channel area, this 92,000 to 96,000 level. Don't get too freaked out about that, but I'm still pretty positive. Bitcoin, technically, we're still pretty positive. We've had this rally to the overbought zone here on the RSI. We've cooled a wee bit. That's last 3 days. Thursday, Friday, and Monday down. We've tipped up again today. The signal line and the MACD line are flattened out here, but we're looking for a tick back up potentially for these. The histogram has turned negative. We've gone under zero, just under zero here. We're at minus 83, 84 here on the MACD histogram. But price action today has pushed us up. So this might be another test into 97. If that fails again, we could move back down again. But big support at 92,000, I said, and the 20-day moving average sits above there at 92,700. So for leeway there, but still bid for Billy Bitcoin and our crypto market. As I say, I keep saying this, don't I? We've had nothing, no chatter, no gossip, no, I'm going to say tweets. He doesn't send tweets anymore, does he, the president? He sends Truth Social, isn't it? It's his own platform for his thoughts. So we've had nothing about the crypto market. I want to get rid of the order panel, don't I? No, I don't want that. I do want that. I don't want that. It's what I wanted to get rid of. Here we are. So crypto bid as well. Energies, oil remains absolutely under pressure. Let's have a look at the WTI. The trend remains to the downside. It's tested the 20-day here at the end of April. We've moved down. We moved down that shock on Monday following the increase in output agreed by OPEC. Took us in opening trades down into this $55 zone on Monday. We recovered yesterday, and we've given up some of yesterday's gains. At the moment, we're still over 58. That's a key support area, the $58. So we recovered that yesterday, but looks like consolidation going through here unless we get some significant geopolitical news. But at the moment, it's if anything, it's darkened, doesn't it, with the Indian? Obviously, it's very regional. The Kashmir issue between India and Pakistan. More positively, obviously, we had this talk or not a talk, but agreement that the two chief trade negotiators, Mr. Besant, who's actually just been testifying to the Senate in the last hour or so. Besant and his team will meet in Switzerland, his Chinese counterpart on Saturday. That didn't really lift markets particularly. The Chinese, although a bit of an olive branch to go and talk, it's really what do the US want? I mean, these are huge tariffs they've implemented on each other, 145% and 125%. There's been some sort of standing back from some key products, some key American imports into China by the Chinese, but the Americans, Trump administration, still holding up China as the number one bogeyman in the room. So as far as it comes to trade, very imbalanced, as they say, but it's really all down to them providing what the great American consumer wants. So there's a bit of an oxymoron there somewhere, but anyway, yeah, we'll see how that pans out on Saturday. So a minute to the news. Let's just bring up with your Forex Factory, our Forex Factory calendar here. Again, there's nothing really going to surprise with this 4.5%. Really, the statement, there may be, as I said, there may be some sort of loosening of this QT. So we're looking for potential cutbacks in the Treasury purchases. And press conference, I don't know whether I'll still be around for half an hour for this, so I'll shoot off and watch that separately, and we can report on that later on. So there we go. No change in the federal fund rate. Nothing, no surprise there whatsoever. Let me just see if I can find the statement, if it's been released. The fiscal hawks are fighting back on the budget, as the headline is coming across my terminal here. See how hawkish Mr. Powell gets. That's what we're looking for potentially, but let's see what the statement says. As it comes across. So we remain in the 425, 450 back. So no change there. There's nothing. I can't see that. I can't get to the. Can't actually get to the page, to be honest. It's not letting me open this here. So anyway, let's have a look, see if how markets may have reacted to that. I guess not a great deal, given that nothing was of a particular surprise. Rates unchanged. Target range. Nothing. I can't get this statement home. Sorry about that. But immediate reaction is 2-year yield has ticked a bit. If we look at the euro, the dollar itself, let's go back to this 5-minute time frame. Dollar's lifted, so dollar's been relatively okay today. As you can see on the 5-minute, it's moved from this consolidation zone here this afternoon, lifted up a bit in the last couple of hours, and euro lifted, so it's weakened a bit on that number. So some uncertainty about outlook has increased further. So they're using the word uncertainty again. The outlook has increased further. So again, it's, as I say, it's nothing to be surprised. Risks of higher unemployment, higher inflation have risen. So the risks have got higher. Treasuries are lifting a wee bit. Yields come down today. We were at 4.35 on the 10-year. We're currently at 4.32. 4.30 actually, 4.28 in fact. There we go. I misread that wrong. But yeah, the relatively stronger dollar today, and you see here, actually, let's just go back to the relatively stronger dollar today. So we were sort of just sideways really. This afternoon we've moved lower in the last couple of hours. The euro moved lower, so the dollar weakened again, but it's the dollar improved in the last couple of hours. We've run into this 50-hour moving average here on the euro dollar pair, and we've weakened a wee bit on the immediate data, but again, it's nothing really in there. There's nothing really is nothing new in there. Obviously, the uncertainty has increased, they're saying, and inflation expectations have increased. I was watching a commentator this morning, I think it was on CNN, where she was talking about a lady that called the great financial crash in 2008 quite accurately by all accounts. She's talking about a potential rise in U.S. unemployment. The main U3 measure rising to 6 to 7%. I know some of the central banks, some of the banks in America are talking about 5 to 6%, but she used the 7 number potentially by the third quarter. Obviously, we're at 4.2 currently. Virtual full employment in the US, but a rise to 7% in unemployment because of the impact of tariffs in particular, she said, and then the lack of her comments was really the lack of focus on the other things like the tax cuts, like the other policy numbers. They seem to have just got obsessed with talking tariffs and talking trade rather than sort of looking internally in the US with regard to tax cuts and how they're going to frame those tax cuts, whether it's just going to be particularly business tax cuts and for higher payers rather than the average Joe on the street. So that was her major concern. It was an interesting take on that. The other interesting thing was Paul Tudor Jones. If you don't know who Paul Tudor Jones is, my friends, go and look him up. He was talking about that stock markets have further to fall. The lows in the stock markets are yet to be hit for 2025. This is his statement yesterday. I think it was yesterday or this morning on CNBC. So if we look at the S&P 500, that's moved down on the Fed announcement. If we look at the S&P 500, we've obviously got a decent old rally. We're over the 20-day moving average and have been for best part of 2 weeks. We breached the 50-day moving average there on Friday. We come down Monday, Tuesday, and we've bounced a wee bit today as we've come in to perhaps find support of the 50-day moving average. But Paul Tudor Jones, PTJ, legend from the 80s, one of the original market wizards, very gregarious type of character and very bullish and relatively high risk taking trader. Have some huge risk reward trades, some massive numbers on his. But he's come unstuck in the last few years. He's bought his fund, but still. Well worth listening to. So Paul Tudor Jones talking about further lows below this key 5,000 level and the 4,800 level for the S&P 500 he sees going into later on in the year. And the Fed, in danger of obviously getting caught behind the curve. It doesn't look like I can't find. Let me just see if I can get all the statement. Yeah, it's nothing. Nothing in the statement with regard to like what they did last time with the easing of the QT. So that hasn't happened. That will have disappointed many. The plus side in the statement is recent indicators suggest that economic activity has continued to expand at a solid pace. Net imports have affected GDP data. Clearly, obviously, we've had this surge in imports running ahead of front running the tariff. Labor conditions remain solid. So yeah, that's fair comment on the data we've seen so far. But obviously, Mark's more interested in what's going to be happening in 6 months' time. FOMC judges that the risks of higher unemployment and higher inflation have risen. So that's his idea about going up, and it was a unified agreement in the meeting. There was no dissenters. So it is a hawkish statement. So it does look like we are looking for a cut in June, but not now. So certainly by, if not July, so possibly next month in June, they will start to cut. Obviously, there'll be comments out of the White House and particularly from the president on this because there's not a lot in here. There's no talk of the loosening of the QE policies, which they started last month. Risks to both sides of the mandate have risen, basically. Obviously, the higher unemployment, higher inflation, and obviously reducing impact is therefore reducing growth. So they're saying, well, it's policy coming out of the White House that's causing this. What can we do? We're going to have to wait and see. But it was fairly, hawkish. Risks have gone up, so we might have to cut and move to cut because of the tariffs. Is what he's saying between the lines. Whether he'll will definitely get drawn on that or questioned on that come the press conference in half an hour. But it's a bit of a non-event, with all due respect to these high impact, or so-called high impact events, isn't it? So if we look at the impact on the stock market, I'm saying non-event, it's moved significantly, relatively significantly, 30 points down here for the S&P on the more hawkish statement. So that seems to be the major beneficiary of the statement. So gold also moving up from this cluster down at 33.85 or 33.88 where we were to 33.95. So we've got a $10 move, or a $7 move from when we were last looking at it. We've run into the high of the day again at 33.98. We can't quite get to 34,000, 3,400, 3,400. We ran to that and then cooled, but gold still remains down on the day, but bullish on the higher time frames trends. I can see there it's a relatively sort of top of the day move to the 3,400 level, 3,400 level. So far today for gold, if we go back to the major dollar crosses, the major majors. Euro 113.55. So dollars weakened there. Sterling. Whoops, it's a new problem. I've lost all my indicators on my FX majors, which is a bit annoying. But there we go. Updates happen. Sterling down. It's been drifting down all day into its 200-hour moving average. Should be some support here. 133.35. It survived the test this morning at 10 o'clock. Will it survive the test post Fed today? But that's a big resistance area. We've got the 50 and the 200-hour moving average all coalescing there at 133.35. So a break of that would be significant, and we could easily go down to test yesterday's low, which took us into this. This is yesterday and Monday's low, wasn't it? Yeah, the 2nd of May. In fact, that was Friday's low at 132.60. But we'll see if its gains from yesterday can hold at 133.35 is where we are now. For sterling, yen dollar is back down to 143 from a rally up today into 143.50. We're going up 50 pips since the Fed, but since the high this afternoon in US trading after the close of the European markets. The 200-hour is held there at 143.50, and we're currently trading at 143 round number. The recent low is 142.40 here from close last night. Had a big step up. So how much of this big initial gain are we going to hold? 143 looks like a potential hold area at the moment, but we could easily weaken from there as well. .6450. So the Aussie's holding its bounce. We went to over 65. Yesterday we were long this on our trading platforms, weren't we? From Monday night, and we're back to 64.50, as I say. CAD 137.80, so we're back to the 113.8 zone for dollar CAD. So dollar having a mixed reaction to the Fed. See how Mr. Powell plays that. It'll get drawn on whether it's going to be a July or a June cut. Let's just have a quick look at what the Fed funds futures are looking like. See, it's a chance to update. This is a free indicator, remember, guys, here at the cmegroup.com. So the Fed Watch tool. So let's have a look what that's looking like That was obviously today. In fact, there was chatter, even a 2% chance of a cut. So let's just update. I'm not sure that's updated because obviously that's already happened, 7th of May. June is looking like a 20-30% chance of a cut. Now, I think, again, I'm not sure that's changed. No, that probably hasn't updated as of 1:01 Central Time. No, I'm sure that's changed actually. So 30% or 27.8% chance of a cut at the June meeting, July. By July, this is what the market's anticipating. We will have cut, whether it's in June or July itself. So there's even a 18% or 17.5% chance of a whole 50 basis point cut by July from some. So we again shall see if that transpires, but certainly by July, the pressure would have been huge from Washington by then. But obviously, the data will have been the 2nd of April. Tariff announcements and implementations will be starting to play out by the June-July time frame. So the hard data will be out, and markets will be trading against that hard data. Remember, the soft data has collapsed recently, but is the hard data going to collapse like the soft data has? You remember the other key thing as well to remember, guys, is markets always tend to overreact, whether it's to the upside or to the downside. So this softening sentiment data, mightn't be as bad as it's anticipated. And the hard data, mightn't be as bad or might be actually positive, and Trump may be proved correct, but who knows? Standard economic sentiment doesn't suggest that is the case, and tariffs have never proved really successful in growing economies. But anyway, they're insisting on that's their way forward, trying to level the playing field as they see it. Unfair situation for the American business, the American consumer. And so if you want to do business in America, you're going to have to pay tariffs to bring your goods and services, particularly goods, obviously, into the United States. Is the president's mantra. So again, see if it all pans out. So it's about it from me, to be honest. I'll be interested to see what Powell has to say later on. It's about as hawkish as, well, it's less hawkish, shall we say, than I was perhaps, again, doesn't matter what I think, but I was thinking that they may have continued this idea of the QE loosening. That didn't happen. So it's less hawkish than, it is hawkish, but it's not as hawkish as I thought it could have been, to try and appease the White House pressure saying cut rates now. Remember these his social media post, cut rates now. That hasn't happened again. So it's a bit of, if you're trying to trade this, I know a lot of you try to have accounts where you trade the news. It's a bit of a non-event, so just be careful, guys. Let me just go back to the 5-minute chart. Just be careful about this. Obviously, this was we've been in to test the lows of the session here with the euro, and it went to test it first, and it moved up quite nicely. So as the data's come, you've rallied quite. There's a few pips in there. We've gone from 113.50 to 113.58. So there's 8 or so pips, 10 pips in that one. So well and good on a 5-minute timer. That's fine, and it is positive. It's over its 20, it's over its 50, and it's over its 200 period. So that's looking relatively bullish. But we've ran to where the congestion was today, haven't we? We've ran through here. If we just flip the, sorry, I didn't mean to do that. I meant to change the outlook. We just put the one we were looking at yesterday, the demo setup, with the which has got our pivot point and our support and resistance zones on it here on the 5-minute time. Here's the euro. So we've been sort of edging up today. So here was our again volume, so a massive volume on the announcement here. So it was positive. We'd been into the pivot area, pivoting around. So that's, as we were saying yesterday, that's positive. We've tipped under the pivot point, but we haven't want to go any lower than we had been earlier in the session anyway. So that's positive. And you could have added there, and perhaps got out now as it's starting to move down. So you got a 10 or 5 pip route, but really, that's it really. You can see how the volume has died within 10 minutes of the announcement. Might might quieten down now for the next 10 minutes until Powell comes out, but we haven't wanted to push to a new daily high, which was back here this morning, as we saw in the other chart at 113.79, 113 sort of 80 zone. We drifted. So dollar picked up in an hour, but we dollar's weakened again. So and again, if we zoom this in, actually take this time frame up, you can see to the one out of the last 5 days. You can see how the pivot point has been generally sort of sideways, but moving up since Friday. So we've been up Friday. Sorry, we're up Monday, up Tuesday, and we're up again today as far as the pivot area. You can see, and then you can see as the support and resistance levels move to the upside as well. So pivoting positively yesterday above the pivot area, we've come back to it today. So we might see a compression of those support and resistance areas for tomorrow. Okay, so anyway, say if you're trading that on obviously on the news announcement, we're at the pivot area. We do the same thing for the stock markets, the indices. Nasdaq, I think it's everyone's favorite, isn't it? Again, so we've had a move up last week, and then we've flattened out. We've sort of turned tail a bit, and we're down now. So up to R1 this morning, over R1 this morning, and we've been down all day, and now we're into S1. Will this actually prove a key support area? And we haven't touched S1 in the last 5 days, have we? There's a pivot area, the blue line's pivot. It's the first time we've been into a support zone yesterday was a negative day as well, wasn't it? Sorry, excuse me, S3 we actually went to yesterday. So it was a weekday yesterday and another weekday today. We closed down at 5606, so still over the 5,600 area on the S&P 500. Nasdaq was down again yesterday. S&P 500 here, and the pivot area today 5610. But S&P doing a wee bit better than the Nasdaq there. That's S1 level down here at 5568. So yeah, stocks weakening, dollar also weakening on the Fed holding rates as they are. Crypto, how's the Bitcoin reacted? 96,003, so it's come down a wee bit from the rally, but we are still holding the key 96,000, so 96,500 in fact. Down from the high of the day, and again much more volatile all the way to R3 today at 97. We've actually been over 97,000 today, so you can see our recent high here took us to 97,700 last week. So yeah, Bitcoin remains bid. Do the same for gold, 3,388. So we're actually under our daily pivot today. So we'll be marking an area of actual quite significant resistance as well, which has been the case. So we've just been, again, you saw that sideways action when these really strong 2-day rally we've seen in gold, where we've lifted our pivot area from this 3245 to 3400 basically today. So significant up day yesterday and on Monday, and consolidation having sold off quite aggressively into the open yesterday. So I'd like to get back over 3,400 to continue this rally. If not, could easily be back down to this 3,300 level before we know it. The way that gold can move these days, but again remains relatively well bid to the upside. Let's go back to our default layout. So the gains have been more or less not completely given up, but it's looking that way here on the 5-minute chart. So 15 rally, and then bang, we've come back. So that's the risk of trading the news. But hopefully you've been in and out in the first 5 minutes, 10 minutes if you're trading that news. But it's certainly ran to the couldn't get to 3,400, 3 398 was the high, the previous high from earlier this afternoon, and again yesterday. This morning, as we said earlier, and down again from that area here on gold as we moved lower. Let me see if there's any. There's no comments in here. So a couple of minutes, and the chairman will be on the podium. Yields continue to move lower. The cash market, the S&P, is back into the 5,600 area. 10-year is now down at 425.77, so down nearly 37, 3.7 points. The 10-year yield. So again, nothing really of surprise in there. Just the fact that the risks have increased. So increased pressure on inflation to rise, he's talking about, and uncertainty, and then pressure on unemployment to rise. And as I said, the interesting comment this morning by analysts talking about up to 7% unemployment rate in the third quarter, something the White House won't want to hear. But again, time will tell how it pans out. And I said earlier, Paul Tudor-Jones talking about further falls in the stock markets into the second and third quarter as well. But yeah, time will tell. Obviously, whatever strategy you use, whatever approach you use, always manage your positions, manage your lot sizes, keep your risk small, and you've got open trades. Make sure that your stop loss means that you're not going to be losing a big amount if you do get hit on the stop loss rules. Let's just come back to our positions, what we've been up to over the last couple of days. I've been a bit. Friday night we put some positions on, and Monday night we put some positions on, and actually updated things until later on this afternoon. So I'm tweaking what I'm doing a bit. The ones I'm putting here, I'm just going to close. If they hit the first target, I'm going to start closing them, particularly the ones when I call also. When I put a note up here like I did on Monday, these are the main daily ones, these three here. And I've been running them, hits T1, I close half the position and keep it open. Because I'm away for 2 weeks from Monday, I'll be out of the markets for 2 weeks. This week I'm going to just close the position as soon as they hit their target or hit their stop loss. So a little tweak of things just for May. Remember, we started the May account before the end of the month, simply because of this, being out of the market for 2 weeks, just to give a balance for the May account. So Friday's trades were all relatively positive, or they were all positive. 4 of the 5 were winners. This was from earlier in the week. There's a half position, the Swissy against the yen. It's actually reversed and went very aggressively down to its elevated stop loss. I'd moved the stop loss up. So we won on the first half of the trade. We lost on the second half of the trade. I think we were negative overall on that Swiss yen trade, if I remember rightly. So let me just check where we are here. This is some comments on here. Swiss yen. So so the first half there was plus 38. The second half was negative 82. So we were overall down about 40 pips on the overall Swiss yen trade. But anyway, the account for Tuesday, yesterday, today will be this negative 82.8. Otherwise, we were positive on Monday from Friday's trades. It was 80 odd points, I think, in the end. I think I put up that it was 60. Yeah, I put here it was 69.7. We ended up at 83 something it was overall. But anyway, so we were a little bit up. Monday's trades, but most of those have closed as well. One losing trade, that 18 pips. I closed it on Monday, because again it was these also trades. Remember, the also trades are definitely closed as soon as they hit target 1. And I checked them, put them on in the evening, and I checked them sort of 7:30, 8 o'clock in the morning. If they're going with the trend, I leave it. If they're not too far away from target, I leave it. If I'm out of the money, I tend to close them there and then. So that's what happened here with the dollar, the short dollar Swiss trade. We were 18 points out of the money, and that was a losing position. But the rest of them all nicely up. So we are up for the week so far. There'll be more trades tonight, technically at the moment. Let me just check my platform. If it's going to run on this workstation. Sometimes it doesn't like to run. We've got a potential Kiwi yen position, an oil position, obviously on the faster system. The typical end of day, we got CAD Swiss, potentially Euro dollar, and the dollar yen again. Euro dollar is looking to go long. Dollar Swiss looking to go short again. Having lost that last one. We've had some choppy markets. There was a euro pound chop around as well. That was long and then short. It was long one day, short the next day. So it was chopping around. It hasn't actually done anything. It's still flat at 85.13 at the moment. So anyway, I will update what happens as we close out later on tonight. So we are in the money for the week. As I say, I'll probably take some tonight if they all tick the boxes. If not, Friday possibly as well. But I say I'm away on holiday on Monday for 10, 12 days. I'm not back to the screens until Friday, the 23rd of May. So we're off to Italy for a couple of weeks, my wife and I. So I will see you, obviously see you tomorrow and Friday, but away next week. Quite looking forward to that as well. Friday, really looking forward to that as well. We've got a trading psychology webinar tomorrow. So on Friday, 2:30. So join us for that. Tomorrow, let's just bring on the calendar. We'll come back to see what Mr. Powell's got to say in a minute. Tomorrow is 12 o'clock my time, 11 o'clock GMT. We've got the Bank of England expected to cut rates by 25 basis points. Again, no dissent. This time has been some significant dissent within the MPC in the UK. So more on that tomorrow. Obviously, you've got weekly claims as well later on in the day on Thursday, and then I say Friday, US Canadian jobs and our webinar on trading psychology to fit into the one we did last Friday on risk management and money management. So let's see what Mr. Powell has got to say. See if he's at the microphone. It doesn't look like it quite yet. So he's running late by the looks of things. No, here we go. Chair Powell, he's just getting his breaking notes out. He's going to read the statement, what he tends to do, and then we'll to this idea of increased uncertainty with regard to higher inflation and potential higher unemployment. So yeah, above our longer run 2%, he's saying. So anyway, I'm going to go off and watch that. Unless you want to watch, him here? I don't suppose you do you? No. Nobody voted for that. Okay, I will see you all tomorrow for the Bank of England. If you haven't got an account with us, obviously the question is why not? It's very simple to open an account. Do come and join us. We have, warts and all, everything you see here is open and available, and you can get some very decent discounts on our evaluations, our either two-step or one-step trading to your funded account. The most popular remains the two-step phase, standard challenge, and our most popular account is the $25,000 account. Obviously, you can double that. It costs a wee bit more, but if you put in, if you're new, put in new 25, or you can still use my code here, SC25. Gives you a 25% discount on the price. It brings it down to under $260 for a 50,000 account. If you fancy, you've got the money. If you put in May is it 150? I've lost the number. Yeah, 150. This allows you to get a apply. It's obviously a little bit more. You only save just over $50. It's under $300 now for a big, substantial $50,000 account. You get 15% discount, as you can see there on the evaluation fee. The 345 comes in at 293, new 294. But more importantly, once you get through this account, because you're a good trader, you're going to stick to the rules. You're going to get your 8% target in step 1, 5% target in step 2, without, either losing more than 5% on a daily basis or 10% overall. And then you get your funded account. So when you get to the funded account stage, you get your $293 back plus another 50%. So you get another $100 back. So you get more than you've paid. So you get 150% of your investment back. This is what that 150 means. It's available for first-time purchasers of accounts. So again, go as invest as much as you can. Get the bigger account. Gives you a bigger equity to play with. It gives you the option to trade some of these less popular assets potentially, but higher risk, higher reward, all that sort of stuff. And you get your fee plus 50% back. You get an 80% share of any profits you would make on your funded account, and you're off and running. And you then scale this up as your skill as a trader develops, your consistency improves, your confidence improves, and you can just move all the way to a $200,000 account and onwards and upwards, my friends. Okay, we're very open. There's no time limits to do this. There's news trading on certain types of accounts. You can trade, obviously hold things over the weekend. There's no swap charges like you get with CFD accounts or even some futures accounts. So give it a go. It's a very interesting. It's a very easy way to get into the markets without investing huge amounts of money. And we're all here to help you. Principally, I'm here every day with my thoughts on the market, and I post some trades every day or most days. Not usually 5 days a week. There wasn't one last night because there wasn't anything basic. And again, that's one of the arts of trading. Don't overtrade. So anyway, I'll see you tomorrow for the Bank of England. If you're not with us, do join us, and I'll see you soon tomorrow. So take care, have a great evening, and trade carefully. Let's see what Mr. Powell has to say. See how we're moving the markets. Let's leave you with gold. Gold has rallied to its day high again, and moved down and bounced a wee bit as Mr. Powell starts to speak, and we're currently trading at 3,385 on the gold market. So take care, everyone. See you tomorrow. All the best. Bye bye.